address, followed by the panel discussion till 8:30 p.m., the Q&A till 9 p.m., and finally we'll close off the event after. Okay, for now, moving on. I'd like to invite everyone to follow our social media using the QR codes. So you can follow us on Instagram, Facebook, as well as LinkedIn. Now I'd like to invite Divya, our Vice President of Research and Editorial, to give the opening address for today.
Thank you, Lorraine. It is my great pleasure to welcome you to the second and final day of our annual Science Summit. We were humbled to see everyone's participation in yesterday's session and hope to bring to you an equally engaging event tonight. Let me start off by talking briefly about SIMES. So SIMES, or our SIM Economic Society, is a student-led society run by a community of economics passionate students who are committed to research and learn about global economic challenges. The society prides itself in elevating students' economic knowledge beyond theoretical concepts learned at school. We do so by holding various economic discussions, writing research papers and articles, and by bringing in discussions of various speakers like a today's lineup of panelists to present their insights on current economic issues. Today's panel discussion is on future of banking and capital markets. Conversations about financial markets have never been not relevant. And what's a better time to talk about the rather evasive financial markets, but when we are stuck in a pandemic? This COVID-19 crisis has presented a serious threat to the stability of the global financial system. Financial conditions have tightened at unprecedented speed, exposing some cracks in the global financial markets. The COVID-19 shock has been a real-time test of the resilience of the banking sector to absorb a wide variety of shocks while still supporting the real economy. To safeguard economic and financial stability, central banks globally have taken decisive actions. And to put this in perspective, according to IMF's estimates, around 90% of the central banks globally have put their policy rates to cut down at extreme lows, and some of them being extreme all-time lows, to provide liquidity to the banking system. While on one side, we are focusing on financial market recovery, simultaneously, we are pursuing conversations about financial innovation, mainly fintech and the opportunities and challenges which come along with its emergence. We have here tonight with us industry experts to give you a glimpse of what lies ahead for banking and capital markets and what that means for you. So sit back and marvel tonight's event. Over to Lorraine.
Thank you, Divya, for the opening address. Okay, now can I get everyone to fill up the poll for us today? Maybe you can just take a minute to do that. Okay, moving on, we'll actually do a Kahoot quiz, so everyone can take part. There are attractive prizes to be won, like the $60 Grab gift card. So I'd like to remind everyone to use their real name in the Kahoot quiz for redemption of prizes later at the end of the panel. So winners will contact Kashvi in the Zoom chat box, okay? Otherwise, you'll not be able to receive your prizes. Okay, so now let's begin with the Kahoot quiz. Everyone, please do remember to include your full names for the redemption of prizes later, alright?
Okay, I'll be starting in 20 seconds, guys.
Thank you everyone for participating. Hello, thank you everyone for participating in the Kahoot quiz. Okay, however, due to time constraint, we will not be able to play the science video. So now I'd like to go ahead to introduce our panel discussion today. So we are proud to present our annual flagship event again this year, the Economic Summit 2020, A Whole New World. Though online this year, we will do our best to bring you an enriching and enjoyable experience. The topic for today will be the future of banking and capital markets. Now I'll begin to introduce the panelists. I would like to thank our esteemed panelists for being virtually here today. Your presence is greatly appreciated this evening. We are very honored to have you on board our panel discussion. First up, we have Mr. Ken Choi. Mr. Ken Choi is currently a team leader of private banking in Credit Suisse Singapore. Before joining Credit Suisse, he was with the Bank of Singapore where he held various roles as investment counselor, relationship manager, and team head for the Singapore and Malaysia markets. He graduated from National University of Singapore with a Bachelor in Mechanical Engineering and also holds 2 master degrees in Applied Finance and Wealth Management from Singapore Management University. Next up, we have Mr. Anndy Lian. Mr. Anndy Lian is an advisory board member of Hyundai DAC Technology. He is an early blockchain adopter and experienced serial blockchain entrepreneur. He is also the book author of Blockchain Revolution 2030. He plays a pivotal role as a blockchain advisor for the Asian Productivity Organization, which is an intergovernmental organization that's committed to improving productivity in the Asia-Pacific region. Mr. Anndy Lian is also part of the Gyeongsang-Bukdo Blockchain Special Committee, Government of Republic Korea, together with industry experts such as Brock Pierce. He was also the former CEO of Lifinity, the world's first distributed supply chain platform, as well as part of the advisory panel of the China-ASEAN Business Alliance. Moving on, we have Ms. Yvonne Zhang, the Director of Risk Advisory at Deloitte Singapore. Ms. Yvonne Zhang has been working with corporates to unlock value in doing business sustainably and has more than 15 years of experience in building and trading commodities products. These include metals, renewables, energy, agriculture in global banks such as Morgan Stanley and ANZ. She has also led the development of commodities and digital assets at Chicago Exchange Group and ran startups to digitalize sustainable natural rubber as well as trade finance. Lastly, we have Mr. Andrew Cohen. Mr. Andrew Cohen is the head of Economic Analysis Department at the Monetary Authority of Singapore. He joined MAS in October 2018 after 12 years in the private sector. including 6 years as head of Asia Pacific Sovereigns at Fitch Ratings in Hong Kong. Prior to that, Mr. Andrew worked at the Bank of England for 9 years in a range of roles, such as monetary analysis, markets, and financial stability. He studied economics at the Universities of Oxford and Warwick. We are extremely honored today to have these 4 esteemed panelists with us. And without further ado, we would like to begin our panel discussion. Paul, our senior subcommittee member for research, will be moderating the panel today. Now I'll pass the time now over to Paul and the panelists. The floor is all yours.
Thank you so much, Lauren, for the very comprehensive introduction of the panelists. Today we have, of course, as we see, a group of very distinguished panelists. For those who have just joined in, perhaps the panelists can give a brief introduction about themselves. Mr. Anndy Lian.
Sure. Hi, I'm Andy. Right now I'm in Singapore, but most of the time I'm in South Korea and Japan. Currently, I'm the advisory board member for Hyundai DAC. That is the largest car manufacturer in South Korea, and Hyundai DAC is actually their blockchain arm. So apart from that, I'm a book author for a book called Blockchain Revolution 2030. I'm an investor as well, and nice meeting everyone.
Yeah, Mr. Ken, would you like to go next?
Thanks, Paul. Good evening, everybody. Thanks very much. It's great to meet you guys here again. And I am, I'm just a wealth manager working for Credit Suisse right now. And I think Lorraine did an excellent job in telling you everything about me, including my degrees, which, yeah, so I was an engineer before I came into banking. And so it's a little bit of a change for me. And it's been a tremendous 15-year ride in the last few years. So I'm enjoying it, very well. So thanks.
Ms. Yvonne, would you like to?
Okay. Hi, everybody. I'm returning with Kent for the 2nd year in a row, right, for the SIM Economic Society. Very happy to see some familiar names, and also very happy to be on the panel with Andrew and Andy to share some of our experiences and also give some hopefully informed commentary, right, about where we are economically and also hopefully climatically. I wanted to share with you a little bit of my experience, not only working in the commercial sections. You can see Lorraine shared some of my CV on the paying jobs, but I also contribute to standards for technology, including blockchain, and also sustainability reporting standards, with the hope that we can all eventually move things towards something that's better and more efficient, right? Not only for commercial aspects, but also for sustainability and also, I suppose, things that can crystallize value better. So I think we have a lot of questions to go through today, and I hope that we can keep this session very interactive.
Mr. Andrew.
Thanks very much, Pao, and thanks for the invitation to take part in the panel this evening. I'm excited to take part for the first time, really looking forward to the discussion. Lorraine kind of gave you the facts there. My background's in macroeconomics, and that's been my career in the private sector and more recently in MAS. Before that, in the Bank of England. Sometimes people ask me what's it like being a non-Singaporean in MAS, and my answer is always, well, having worked in a different central bank before, it really feels pretty similar. I think central banks are just like that. They're kind of pretty distinctive institutions, and they seem to have a lot in common with each other. Like I said, my background's in macro, but one of the first things that I participated in after I arrived at MAS was a conference on digital currencies back in November 2018. And that was the first time I'd really engaged with the topic in any detail. two-day conference that we had back then. Fascinating subject. I became very interested in it, and I'm looking forward to just looking at the questions that we have for discussion. I think this topic of digital currencies will come up, so I'm really interested to hear what the panelists have to say on it. Thanks very much.
Thank you so much for the wonderful introduction. So let's start our panel discussion with a little bit of forward. So 2020 has been a tumultuous year for the banking industry and the financial markets. The COVID-19 pandemic has, by and large, shut down advanced economies and disrupted billions of lives and jeopardized decades of development progress. So today we'll be taking a look at how this situation has shaped the future of the financial industry. So without further ado, let us begin our panel discussion with the very first question. This question goes out to everyone in the panel. So one of the comparisons that the COVID-19 crisis has caused was one of the things that the COVID-19 has caused was the current recession that we are in. And one of the comparison that's often made to the current recession is the financial crisis in 2007. So I would like to ask from the panelists' experience, how has this recession caused by the COVID, how has this been different to the financial crisis in 2007? Perhaps Mr. Anndy Lian, Mr. Andrew would like to go first.
I'm happy to give a quick response on that, Pao. Just it's the sort of thing we look at day in, day out in the economic policy group at MAS. So I mean, the first thing I would point to is that it's been bigger. The impact's been larger. So it's the largest recession globally since just after the Second World War. We estimate the global economy contracted about 6% in the first half of the year compared to the previous 6-month period. So during the global financial crisis, the contraction was about 2%. So a much larger dip in activity. It's quite rare that we actually have an outright contraction in activity globally. So it's been a really severe shock. In terms of the channels that it's worked through, I think an important difference versus the global financial crisis is that the main channel this time has been a government-mandated stop to certain a broad swathe of economic activity, particularly services and consumption. That's quite rare for recessions. Usually the sort of classic recession happens through some shock to businesses, and you see the impact on capital spending, and consumption tends to be more stable. This time around, consumption has been at the kind of epicenter of the shock, and manufacturing's actually been quite strong. Why does that matter? I think it matters because we expect a bigger permanent loss of activity as a result of the COVID shock. So if we think about a recession, normally we get a kind of a dip and then it comes back. But this time around, the dip, and then it's a huge dip, and it's right now we're in a big upswing, but that's going to leave us in quite a weaker place than we would have been, or we were expecting at least, if COVID had never happened. So if we think about our economic forecast now compared to what we thought before COVID hit, we expect the global economy will be about 3% smaller by the end of 2022 than we thought before COVID. So that's effectively a year's worth of global output lost. And I think that's partly because of this consumption centered nature of it. So if you don't go to the cinema, or if you don't go out for dinner 1 week, you probably don't go out twice the next week, or you might, but you probably don't. So that kind of services, consumer-centered activity is more likely to be gone for good, hence the relatively large permanent output hit. All sorts of consequences and ramifications that ensue from that, but maybe I'll pause there and let other panelists give us their views too.
Mr. Andy.
Yep, okay, sure. So what I do see and the difference between what happened in 2007, 2008, I think is a very different kind of a damage that we see, like Andrew has mentioned. This time round, I think the rebound will be really tough. We can see the retail market is really bad. We do not really have too much social life anymore, and the new normal would really be already set in. You know, all of us are all going digital, and uh, a lot of these traditional brick and mortar companies are going to suffer big time. So the rebound is going to be really tough. You know, there will be a lot of shift that we see in the market. SMEs are also in very tough times. I was talking to someone from the Taiwan trade as well. They are all very worried. You know, what's going to happen when the grants run dry, and will all these tourism related companies close down? You know, so I think the rebound is going to be really tough, and I do see a lot of opportunities as well that comes together with this, you know, in terms of digitalization. So maybe that can lead to a later part of the conversation.
Ms. Yvonne.
I think if we actually consider some of the hallmarks of crisis is that it always comes back, right? So in my life so far, I've seen 3 rounds of global crisis. This time, the difference is that, yes, there's a consumption side shock. There's also a massive breakdown of globalization and also reshuffling of trade corridors as well as diplomatic alliances. So what it also means is that the medium of exchange in the past, it was currencies or commodities, right, are at the core of the current crisis, in the sense that in the past, people are reliant on top-down decision-making between different central banks and also various governance agencies to actually push down benefit. However, if you are not sure whether the value that's being dispersed to you will actually be preserved, and also you are able to procure the material that you want to from the typical trading partners without encumbrance, right? And also the ability for you to disperse risk and also continue your uber efficientized just-in-time processes, right? All of those assumptions being debunked right now. So digitalization is a necessity. It is something that's been forced upon a lot of entities and also a lot of communities. But the implication is that we haven't really fundamentally changed the operational procedures, the risk assessments, and also the human aspects of changing alliances, adopting to the new normal. And I suspect that, as we've seen with every crisis, something fundamentally shifts in society. It's not that new laws get introduced. It is actually that the rise and fall of power is going to create, I suppose, a new dynamic, right? And we can see that, in the space of commodities, in the space of financial regulation, in the space of payments, in the space of trade wars, and also digital currencies, which I think we'll be talking about in a while. Those are going to fundamentally shift the thinking of next generation, because printing money might not be the solution, right? Because we've already seen that it hasn't worked last round, it's not working right now. So I've digressed a little bit, but I suppose if I can make a prediction, we're going to see another round of crisis sooner than expected, because Andy is nodding his head, Ken is nodding his head, and I hope I get the Andrew nod as well. Okay, I got everybody nodding, fantastic. It's just that information incorporation cycle right nowadays, and also the knock-on effects is a lot more rapid. So with that, with that grim prediction, I pass on to Ken, the polymath.
Aspiring, I must emphasize many times. Yeah, well, the last thing that you said, Yvonne, is interesting, that we will see another crisis. I'm very certain of that. And I think the compression of the time between 2 crises I was actually quite shocked to see that these 2 crises were 12 years apart. It's quite a long time, right? I mean, if you don't count that small little blip we had in the middle. So 12 years is a very long time. So the difference between 2020 and 2008 is 12 years, and it's a very, very long 12 years. I like to examine what was in 2008 and 2020. I think they're two very different crises and two very different sets of situation. Today, fast forward that 12 years, we see a extremely polarized world, a lot more than 2008. Politically, it's just massive divides all over every country, almost every country. You've got the Trump effect, and in between these 12 years, we have potential of someone who's going to rule as long as he likes, for better or for worse. I'm not making a judgment there, but that's a change in how things are happening, right? I think politically is one thing. Societal pressures are very different as well, and also Yvonne said this, right? The last time money was dropped from the helicopter, it didn't quite work. And in fact, it actually created these unintended consequences of the divide, right? The divide is wider than ever today, and it's getting a lot more apparent. So that's another very important difference between these two crises. On a positive note, I think that also in this last 12 years, a lot of things have advanced in the technological space, right? Technology has advanced so much. And I keep saying my iPhone, for example, is a little less or more. It's about 12 years old, right? It's about 12 years old. And in the span of a lifetime of an iPhone, we have so much advances in all aspects of technology that if this were to happen in 2008, the world would have been a very, very different place, right? Zoom like this might not have taken place easily. I think bandwidth was a fraction of what we have today. The technology that enables all these, the ability for us to react, I think it's very different. Yeah, that's why I think it's different. One last thing I want to add, again, was mentioned earlier, is I think the currencies in the future, yes, I'm sure we're going to talk about cryptocurrencies and all that, and CBDCs and all. But the currency today is actually mask, PPE, and very soon vaccines. Right?
So before we touch on the topic of fintech, one of the key terms that has been appearing recently, gaining prominence, is the term environment, social, and governance investing, the ESG investing as they called it. And this was really catalyzed by the COVID-19 as well as the Black Lives Matter movement that we have seen in US. So also, I think this was it last year. I think BlackRock announced that climate change was one of the pressing agenda that they wanted to address. And so we see that happening in the United States and over in the Asia Pacific. ESG investing is not gaining much of a prominence. So I'd like to ask Mr. Andrew as well as Mr. Ken, since you guys are working in a bank, how do you think ESG will unfold in the Asia Pacific or even in Singapore as a whole? Yeah.
Thanks, Paul. Maybe just say a few words on that. It's an interesting time to be discussing that question from an MAS perspective. MAS launched a green finance action plan in November 2019, and we actually released version 2 just in October. So it's a very contemporary, current area of interest for us. The ambition of the plan is to place Singapore as the leading regional and global hub for green finance. So we're aiming high, I guess. Singapore is already ASEAN's largest green finance market. It's about 50% of cumulative ASEAN green bond and loan issuance so far. We're not starting from zero. There's a good base to build from. From for what it's worth, my previous private sector experience in asset management, it was even then, this is going back well, just 4 years now, but it was clearly an increasing interest and concern from the consumer side. So you've got the demand there, business reacting to that, and for ourselves, from our MAS perspective, very keen to facilitate the development of the sector.
If I can just add on to what Andrew has said and his last point about demand, I think the demand that banks see today is very, very strong. I mean, that's pretty weak way of describing it. It is real. I think that's the important thing. It's real, and we constantly get questions from clients and partners about ESG solutions. And that gives us an idea that there is real demand out there. And the good thing is that clients are actually taking action, right? So they are actually acting with their money. They will allocate a certain amount, or actually do choose ESG solutions over others. And in my firm, for example, we are actually moving on a very, very strong drive to classify almost every impact. We are trying to do every investment we have in the portfolio, on our shelf, to be ESG, well, not compliant, but rated for ESG. So for someone who wants to own a fully compliant portfolio, they can actually go for the highest rating of everything, right? So I think that is one phenomenon that we are seeing. The other one that I think is just as important, if not more important, is that ESG is not new. ESG has been around for, well, in various names and forms for maybe at least the last 20, 30 years. It's had many names, right? Impact investing, well, impact is slightly different, but green and sustainability and a few other names, right? It's not new. What is different this time is that we do see a trend of ESG solutions that are actually delivering returns that's not too different from your regular funds, your regular solutions. And I think that is also a driver for consumer demand. Right? If clients decide that they can actually do good and get the kind of returns that they expect to get, I think that's a huge plus to that space.
So I want to add to Ken, the definition of sustainability was coined by the United Nations Frontline Commission in 1987, right? And before then, there were a lot of other words for it, because we've all heard like triple bottom line, CSR, right? And so many other types of descriptions of corporates wanting to do good. That's in reply to, I suppose the school of thought, especially during the 1970s and 80s, where there was this whole advocacy for shareholders value first, greed is good, right? And then that went a bit too far, and folks started to wonder, should companies do more than maximize shareholders' interests and not care about anybody else? So in the current climate, I think it is still important for us to distinguish all the different concepts, right? CSR, corporate social responsibility, is about what the corporate can actually do outside of its core business, incidentally. So it's not something that they can fundamentally change from their way of business, right? So that's why they do a lot of charity giving or community service, etc. And then, a lot of times when people start to think about sustainable investing, they are thinking about avoidant, meaning they avoid investing or financing fossil fuel and also violations of certain labor standards, safety, diversity, discrimination, all those kind of guidelines, right? So if we actually look at it, folks talk about the 17 UN SDGs. Though the 17 UN SDGs are not meant to be there forever, it's actually meant to be achieved, meaning it's meant to be sunset in 2030, right? The goal is that we actually achieve these goals, and then we graduate towards reducing a lot of the burdens we have actually imposed on environment, on social communities, and also on the fabric of us as a global village, right? So the cynical view to this whole rush that is very well summarized by Larry Fink from BlackRock, right, about mainstreaming ESG concerns in investments, is that there is a move towards passive investing. From the last two rounds of financial crisis, there's too much money in the hands of institutions, and there's too much money being printed, and it has to go somewhere. So the passive investing pointed towards a lot of money going to indexes, a lot of money going to hedge funds, a lot of money going to quantitative model driven rather than human trades, right? So I was working in the exchanges and I've seen that. And so, you know, when you see the passive investment driving brokerage and also management fees down to zero, and therefore, you know, a lot of folks nowadays on Robinhood are very happily trading the gamified version of investments. What is there for asset managers to do to justify their fees and also to justify their expertise? Then it becomes, okay, then we need to look at impact investing and sustainability, because those things are not just simply doing financial analysis. You're actually incorporating non-financial information that are very scientific, sometimes in nature, or socioeconomic in nature, or sometimes actually a bit ephemeral, frankly speaking, in nature, right? How do you value community and partnerships? How do you value, you know, racial harmony? You can't, right? So therefore, impact investing also requires a very long investment time frame, because you can't assume that, you know, investing 3 to 6 months, you're going to see impact on humankind. You can do that in a negative way. Positive change takes much longer, right? So hence why a lot of asset managers are gravitating towards ESG strategies and also impact mandates, because it locks down the investment money for longer, so that the asset managers can do something with it without being threatened with redemption and also withdrawal risk from investors, right? So I'm probably sharing too much about the dark arts of investments, but we have to be honest. No one is donating their money expecting no return when they think about investment, right? Investment requires you to have this expectation of taking money that you've earned through labor back with some positive return, right? So therefore, you know, ESG is a layer on top of regular investments, and people need to actually understand, you know, there is a balance as to what is your demand for monetary return, your demand for liquidity, as in how quickly can you access your money, right? Versus what are the more superfluous goals that you can aim for long term, but you possibly, you know, might think a bit more carefully about, do you want to do something just by investing, or do you actually want to do something more active in other ways, right?
Yeah, now let's move on to the realm of fintech. So it seems that currently, you know, we are in this scenario where there's a large, you know, two large entities at the moment, one being the traditional banks, you know, the central banks, and the other being these major fintech corporations. So even recently, we heard of Ant's IPO suspension, and one of the main point for their suspension was, you know, not being really regulated, and thus leading to their suspension of the IPO. So how do we see this field playing out between the traditional banks, central banks, and the big fintech companies? How do we see that playing out in the near future? Yeah. Mr. Anndy Lian, I'd like to go first.
Oh, sure. That's a very big question. I think whether it's a bank or the central bank or these financial institutions, they all play a certain role right now. If you are looking at the different function of these three groups, you know, they are actually offering different sets of skills and different sets of things, you know, to the consumer. So to me, as a investor and also from a technology standpoint, I do think that currently, where all three of them are actually working very closely together, this is actually bringing very good end results and impact for businesses. You know, in the past, you know, we do see that there are a lot of restrictions, you know, from transacting cryptocurrency, for example, you know, with different banks. Right now, as the regulations are much clearer, you know, the different crypto bills are much clearer. I think, you know, the way cryptocurrency works with bank has also evolved, you know, in the recent 1 to 2 years, especially. Things like Cbdc has been a hot topic, you know, for the last 6 months. Other hot topics like, you know, how fintech uses cryptocurrency is also another big topic. But to me, just to be really clear, right now at this current moment, if we talk about just cryptocurrency, I think it's in a very early stages. Being decentralized is also not the way to move ahead at this current times, because we are still in a very young stage where we have to work very closely with regulators, work closely with the banks to create a better ecosystem. This whole runway or this whole journey works very similar to when fintech first started maybe a decade ago, where we talk about all the different payment apps and so forth. There's a certain journey to it. So right now, I think for banks, they are trying their very best to support new activities, digital currency, cryptocurrency, and so forth. They are trying to learn. Central banks are also opening up. So a lot of the kind of work that I was doing in 2018, with the different government in Japan or in South Korea, are very different now. Now, when we talk to the different government, they are very receptive. They are very open. You talk to the bank, the national banks, they are very open to talk to you, on how they can integrate the current traditional fintech technology, payment wallets into cryptocurrency. So I think I'm a bit more forward-looking. I do feel that the banks and the new technologies, or the regulators and the new technology, I think it's going to work very much closer, also thanks to COVID-19. Without COVID-19, I think a lot of things could be still in a really comfortable zone and not moving that well. So right now, I do think because of the pandemic, everyone is working a lot closer together, a lot more bonded. And in general, I think it's going to be a very positive thing.
Mr. Andrew.
Yeah, thanks. I agree with what Andy was saying there. I think fintech is certainly a core focus for MAS. Actually, MAS has just committed $250 million under the Financial Sector Technology and Innovation Scheme, the FSTI. It's version 2 of that scheme, which is aimed at strengthening Singapore's competitiveness in this field, and through accelerating the adoption of new technologies and securing innovation-led growth in the finance sector. Just to give you some kind of flavor on what that scheme means. So there's a proof of concept grant that's part of it, which is up to $400,000. There's a maximum of $1.5 million for projects in the AI that employ AI technology. And I think what's maybe most exciting is funding in innovation labs, so that there's a place where Singaporean talent can develop, and we can build a pipeline of people to go through and work in the sector and drive its further growth. Maybe a couple of other points. One is just to note that it builds on a point that one of the other panelists made earlier, which is what would things have looked like, and things look different now compared to 2007, 2008. And one of the factors that's, at least from our perspective as the regulator, helped the banks to continue to deliver a good level of financial services to the community has been the wider adoption of or use of fintech, online means of banking, of delivering services, much less need to go into the branch. So if we'd had a similar, we've had epidemics previously, but if we'd had a COVID scale event in 2007, 2008, the ability, the flexibility of banks and of households and businesses to adapt to that would have been probably much less than it has been over the past year. There's just one other thing I'd like to note, which is the benefits of our location here in ASEAN, where there's a rapidly expanding, this isn't a great year for the economy, but over the longer term, a rapidly expanding middle class with demand for increasingly sophisticated services, and who are perhaps less committed to existing or older fashioned means of or channels of delivering those services. So a couple of years ago, we launched the thing called API Exchange together with the ASEAN Bankers Association, which is and now has 300 fintechs and 50 financial institutions on a platform across 30 countries, facilitating collaboration between traditional FIs and fintechs to enable firms to access new markets and to capitalize on that growth potential in the ASEAN region.
Ms. Yvonne?
Okay, all right, I know that we're gonna head into Q&A soon, therefore I'm gonna start to throw very difficult words so that people are inspired to ask questions. So following on what the other speakers have been talking about, I want to elevate the conversation a little bit. Right? When we talk about digital banking, and also when we talk about central bank digital currency, in my mind, it's not just about doing things faster and cheaper. It's actually about doing things that were not possible in the traditional means, right? So one of the key goals of the Singapore digital banking license is to enable banking of the unbanked or the unbankable. So, a lot of times we see that, having a bank account is an assumption that we middle class make. That actually is usually wrong for folks that happen to have difficulty obtaining identity, keeping enough balance, or have physical proximity to branches to be able to open accounts, right? So Singapore is very convenient, and also it's very secure, very high tech. Everything is good. However, once you step outside of that bubble, right, into our neighboring countries, that's actually a problem. So digital banking, I would say right now we see very exciting opportunities to allow the inclusion of the disenfranchised and difficult to serve people to actually become part of the financial ecosystem. And then also create new assets and also new solutions for them. Digital assets is one way of addressing some of their needs, right? Fractionalizing titles of investments, fractionalizing liability so that risk can be better shared. Those things are not possible in the traditional means, right? So that's the positive side. Now, I'm going to start to scare people. So folks, get ready with your questions, yeah? With central bank digital currency. So CBDC. Central bank digital currency recently has been called T0. T0 means you don't need an extra day or two to settle, right? Which means your assumption that your money is being transferred, anonymously via cash or known between different banks and the processing banks, when you actually use the banking rails versus, your identity being known by the central bank when you actually spend the central bank digital currency directly. Those are all very different skips, right? In terms of what money is for, what does the money and the data that transfers with money imply, and also what does that mean going forward when we consider what does our social score mean going forward, right? If the government and the corporations that serve you and also the central bank have visibility to your social credit as well as your financial credit, and it directly impacts on the money that you can earn, right? And also the behavior that they want you to do, that kind of thing becomes very interesting. And then also when you have central bank digital currencies connecting with each other, right? You actually don't need hard currencies. You can actually directly settle balances. So what does that mean for trade war? What does that mean for units of account and also preservation of value and medium of exchange? So all of those things open up very, very interesting discussions that completely challenge our traditional thinking of macroeconomics, right? So all the scary words, I don't know how many people have caught on. So I hope that people start asking questions, asking like, what the hell are you talking about?
Building on what Ms. Yvonne said regarding CBDC, there's also this main concern that, could the government be, always be constantly looking for us? Could the government, control the way we behave? So what's your take on this? To Ms. Yvonne.
Hey, not fair, right? We need to allow audience interaction. What's my take on this? I think my views are a little bit tainted, right? Because having seen good examples, right, and potentially very worrisome examples of the protection or lack thereof of personal data in very different circumstances, I do worry. So, with the introduction on the one hand in Europe of GDPR, right? In Singapore, we have PDPA. In many other countries, you don't have that. And then you also see the move to cloud technology, right? Anyone that has read Edward Snowden's book, Permanent Record, or heard about all of those WikiLeaks and whatnot, you'll start to realize, nowadays where we store our data, who has visibility to it, and the importance of metadata, they all are very rapidly changing our world right now. And what you mentioned about financial, why the government is stepping in to regulate them, not as a fintech, but as a financial institution, there's probably good reason for that, right? So from my perspective, I don't think that's a good or bad or black or white question. And it's just so many shades of gray that's like almost 4-dimensional, right? So yeah, I want us to have a debate, here today, right? It's a lot of smart minds and a lot of very sharp tongues here.
Mr. Andrew.
Well, yeah, as I mentioned at the start, one of the first things that I did when I came to MAS was participate in this Central Bank Digital Currency conference that we had in October 2018. That was really my introduction to the field, and it's a field that's rapidly developing. I think it's fair to say at that time, so we had on the one hand the kind of academic economists, and on the other hand kind of more fintech practitioners, digital currency experts, and there was a clear divergence of view between the two. So the academic economists generally quite kind of skeptical. Perhaps it's fair to say they didn't seem like they had the future on their side, but a lot of nonetheless very helpful, informed contributions about how in some ways some of the developments in digital currencies are or maybe like monetary or financial experiments that have happened in the past. But certainly digital currencies are a key area for MAS, as is everything that we've been discussing this evening, and for central banks globally. So the ECB, Bank of England, Bank of Japan have all recently published research laying out the case for retail central bank digital currencies. I think it's kind of a consultation and a listening phase for the central banks. My sense is that the consensus view across colleagues in different institutions is that there's no immediate urgent use case for a central bank digital currency. Admittedly, in this region, some central banks have gone further, so China, and more recently Cambodia with a very innovative approach. So in general, though, I think across the major central banks, kind of a listening and consulting and also waiting and seeing. Not quite clear on the immediate use case. The privacy concerns that Yvonne just mentioned, certainly part of the discussion. If it's any reassurance, I would say where there's no kind of conspiracy among central banks gathering in Switzerland or somewhere to say, right, how can we find out what everyone's spending their money on? It's more thinking about the monetary and financial stability implications of digital currencies, keeping an eye on private sector developments as well, so that we don't have a situation where central banks fall behind the curve and the private sector comes forward with solutions to a business need that may come through. We don't think it's there yet, but I guess the risk from our point of view is that we miss the growth in demand for this kind of solution, and it leads to the private sector coming through with a solution that may not be optimal, maybe destabilizing. So monetary stability and financial system integrity, as well as the privacy concerns, are really the central considerations for us.
Okay, that's very interesting. But I just want to carry on with Yvonne's good vibe on this discussion. I think putting on an individual hat, yeah. I just want to share a few things. One, I think CBDC is here to stay. Whether or not our data is being captured somewhere, whether it's being traced, whether it's being manipulated somewhere, I think this has been an ongoing topic and something that we can't avoid, because right now a lot of these servers, where our data are going to be resided on, and so forth, we are all not aware of, and we don't know too much. So putting up our data in that kind of manner is already a very risky thing. So in my line of work, where we talk about blockchain and cryptocurrency, we talk about things that are centralized and decentralized. The good things about decentralization, the bad things about centralization and decentralization. I mean, the topic goes round and round and round. But put it this way, as a rather pro-government guy, in my space, I would dare say that staying central, has its pros and cons. But when we talk about general consensus, whether do we want government to hold on to some of our records and use it without our consent? Most of us would say no. So does this mean that in the near future we are going for a decentralized world? Are we going to really whack CBDC really hard? Because in some of our discussion, among thought leaders in my space, we do see that the CBDC is something really redundant, because ultimately it's still going to be a very much centralized fiat, where things are just a bit more digitized, and so what? Things are just going back to normal. Does it mean that central banks are not going to print any more currency? Not true, man. It's a lot faster. There's no need to print the physical paper, right? So I do see that just for this discussion's sake, there is a very specific gap and issue that we are trying to solve, and perhaps a more decentralized model or more decentralized world of finance system may help in some ways, or even a hybrid that we talked about last week as well, where digital currencies, or perhaps I should say where cryptocurrency like XRP, Ripple, they are thinking of being the stable coin for the CBDCs. I mean, all these are concepts, and I do see that the top cryptocurrencies company are recruiting experts, to run this agenda. And again, it seems a bit overlapping and trying to be decentralized and centralized at the same time. Perhaps that's going to be that kind of hybrid model that we talk about. Well, what do you think, Kent? You have been quiet, man.
Wow, I like this escalation. There's just so much things that you guys are have talked about that I'm kind of lost, right? Everything you say, I was like, okay, there's another one, right? So it's amazing, right? This is very, very rich discussion. I think one of the things that I think is that needs to be highlighted. The difference is there's a decentralization of currencies and all that, your CBDCs and your cryptos and all. And also decentralize, if that's what you mean, decentralization of data. I think that's quite, in my basic understanding of the technology, quite a tall order, because we are talking about multiple petabytes, and I don't know what other bytes of information out there right now. It's impossible to decentralize in that kind of technology, but you're talking about locating servers within jurisdictions and geography. I think that's not going to solve the problem, because, I mean, in an odd way, I believe in the ability of the hackers to go through any borders. Data security and hacking is just an arms race. You win today, I win tomorrow. So I think that is one future that we have to be very, very aware of. Now, I'm not going to say what implications there will be, but I think we need to think about that, right? And also that the question of whether a government holds the data and controls the data, as opposed to a corporation that holds the data. You would hope that either or both of them are benevolent. And I would argue to say that maybe a government you would assume to be a little bit more benevolent than a company. But that's also something to think about, because somebody's going to hold the data when it's out there. And it's just mind-boggling how much data there is.
Jump in on last point. So Ken, I think hacking is one thing, right? One sentence I heard that was very illuminating actually from Edward Snowden was that when you actually capture a lot of data by machines, right, you can't forgive and you can't forget. And that's actually a very scary thing because a lot of times, you know, we've all made decisions, right, that could have been perceived in different ways. And then when we have actually a record of activity and also metadata, you can't really control it, right? Because you can't consciously influence what the triangulation of your position by GPS or your phone signals are, right? So those kind of things, I think, is something I think unfortunately people don't know enough about. And cybersecurity, again, you know, I think institutions and also individuals don't know enough about. I know that we're heading quite close towards the discussion points. You know, I think I'm very keen to see what the audience has to say, to share their perspectives on how important is it to them, and do they really care, or are we just people that are too nerdy and know too much?
As we wait, I'll jump into one point to add on to what you said, right? Somebody said to me, a security expert said that one of the biggest worry you have to look out for, or one of the biggest thing you have to look out for, and he worries about this in the next several quarters or year, is a massive hack of all the things we have been doing working from home. Because we can have the best and robust enterprise data security system, but my Wi-Fi is hackable. I don't know, he's worried about it. When I listen to that as an amateur, I think that's something to think about.
I think that is that's too much to worry about, you know, Ken. I think that security expert is very much paranoid about everything. But based on what I see right now, there is really a need to you know, keep the blockchain technology going, right? Because if you are worried about being hacked, you're worried about security, you're worried about everything else, perhaps blockchain technology can help a fair bit to secure your current data, whether it's with the government data or whether it's in the corporation data. There are higher chances of being hacked. You know, even our PM's medical records are being hacked, right? So what's going to be new? But is blockchain technology unhackable? No, it's not. But at the very least, perhaps Andrew might want to agree, is that we tend to use the technology to reduce the chances of being hacked, you know, and that could be one great thing that could happen, you know, in the shorter run that we can see.
Yeah. So thank you so much. So we also have a poll for the audience. Could we please have it up, the co-host? It also perfectly aligns with what the panelists have said regarding the biggest concern that the people might have. And can we have the results up? Yep. As we can see from the poll, our viewers, they also feel that cybersecurity and security breaches would be the biggest concern for the future of banking and capital markets. So one last question for the panel discussion before we jump into the Q&A. And please, for the viewers, please do type in your questions in the chat box, or even you can also ask it on video. So one last question for banking for the panelists. With all these in mind, with the poll that we've done just now, with this threat of cybersecurity, as well as the recent RCEP trade, the Brexit unfolding, as well as the US election, what do we think that could be the biggest challenge and opportunities for banking moving forward? Yeah, perhaps Mr. Andrew would like to go first.
Thanks very much, Po. Yeah, wow, it's a big question. We've actually just released our latest financial stability review just this week, where we give quite a, it's quite a long document. It says a lot on these topics. I think so far, at least, and it's interesting from what you from the poll questions, I mean, when we think back to the GFC, for example, it wasn't really any of those issues on the poll that led to the problems in the financial sector back then. It was macroprudential risk, credit risk, basically not pricing risk correctly. It's interesting, yeah, it's kind of interesting that those sort of more old-fashioned or traditional kind of, financial system risks weren't on the poll. I think, that's certainly from our point of view as a central bank, that's kind of front and center for our work on financial stability. So, and having said that, I think coming out of the COVID recession, I think the conclusion, from our financial stability report is that actually the financial system has come through this unprecedentedly deep economic recession in fairly good shape. So the strengthening of the capitalization and funding buffers since the global financial crisis has helped to strengthen the resilience of the system. So I think that's, we particularly central banks, we tend to focus on the downsides and the risks. But maybe just pause to note that in some ways, at least, things have worked as they were supposed to, and fingers crossed, we've had a fairly good outcome despite the depth of the recession from a financial stability point of view.
Thanks, Andrew. Let me jump in here. The poll is interesting because it kind of like, I don't know when you did the poll, but as we're talking about cybersecurity, it seems like the thing that everybody's concerned about. And, to Andy's point, I'm with you. I think it's not so much as worry. We do think about it. I think it's one of the things that we need to be aware of. And if there are worries, I think there are a lot more things to worry about in the world than just cybersecurity. And the thing we need to be aware of, not just about cybersecurity, but a lot of things that's going on in the world today, is that we may not really understand what is going on because our minds are not really geared to understand the exponential effects of a lot of the things that we're doing today. And cybersecurity is probably just one of these aspects of things, right? And one thing that I think COVID has done is, I say this, that COVID hasn't changed anything, really. It merely just accelerated everything in this really amazing acceleration. And the acceleration here for banks is that to realize that they have to do several things. One, not ignore things like blockchain technology and all the uses outside finance or the uses in cryptocurrencies and Cbdcs and all that. That cannot be ignored. And I think that's one of the reasons why we see a lot more positive stance from big financial institutions today. The other thing is that banks really need to start thinking about innovating and get off that high seat of being an utility for, I don't know, maybe the last 50, 60, 70 years, and start doing things, whether it's innovation or partnering with people who innovate to deliver the proper services to people. Not just the middle class, but the people who actually need it. One example is how money can be distributed a lot quicker today when there are CBDCs around, and enable in a very stable and fair and controlled manner peer-to-peer lending. I think that's one of very, very big concern because it's a potentially extremely disruptive technology. And things like that, right? I think that's what banks are waking up to today. And I'm quite positive that this time is for real.
Mr. Andy. I think you need to unmute your microphone. Yeah.
Sorry, I do agree with Ken that COVID-19 has accelerated a lot of technology adoption. I also do see that regulated players or regulated or regulators as whole are also trying to do a catch-up game. Just giving an example in Singapore, for the longest time, the Singapore government has been very pro fintech, pro-innovation and technology. But the sad truth is that a lot of businesses or SMEs took the grant, took the money, but they didn't actually follow through the whole process of innovation. That is a very big issue. So in my previous, I think there's one keynote speech that I gave earlier last month. I do also emphasize that government's help are actually very important, but too much help is also stopping us from being sustainable. Also being resilient to the next pandemic or the next crisis that Yvonne has mentioned. I do hope to see some continuity in terms of how fintech technology can really evolve. How the funds can actually be put into better use for businesses to grow. In Singapore, if you go to some of the shops, they place a lot of different stickers out there. But then when you want to use it, they will say, hey, please don't use it, in a very Singaporean tone. Or maybe they will tell you that, sorry, man, the card machine is not working. Oh, you own an Amex card, it's not going to work, man. There's a lot of different excuses that are stopping innovation and fintech. If you go to South Korea, where I'm always there, even a push card auntie, you buy a bottle of Yakult or something, they will say, do you accept credit card? Oh yeah, no problem, man. They can just do it. So I do hope to see such things happening in Singapore. And before we talk about cryptocurrency, that kind of awareness and that kind of push, whether it's from the government or from the federation or from the association, that must be done properly. And I do see that, because being Singaporean and Singapore being small as well, I think a lot of things can change a lot faster. So love to see that change.
Thank you so much. Ms. Yvonne. Yeah.
Okay, which question do you want me to address? Everybody sort of diverged a bit, and I've been answering questions on the chat as well.
Freestyle, man, freestyle.
Freestyle, oh yo. So Kent and I are starting to address questions on the passive investment stuff. But I think there was an interesting question that came up about jurisdictional arbitrage, right? Of I suppose big tech and financial non-bank institutions, right? So what I was sharing is that, well, number one assumption is that people assume there is universal law that apply, same as no such thing as world peace. There is no universal jurisdiction or anything, right? A lot of different laws already apply for various types of transactions and also classifications, and a lot of different touch points, right, to decentralized economies, right, that blockchain represents. So my point here is that if we actually think about whether regulation is something that those big tech companies are going to avoid, it's actually more a question of, well, these big tech companies are already doing things within the guidelines of existing regulations, but what they do is not something regulations can modify. Right? They've already modified our behavior. They've already started to push around data and do things in a different way compared to traditional finance, right? I think there is a little bit of a fear as to if big tech and also financial non-bank institutions remain ungoverned and they have more power than governments because they have access to a lot of our data and a lot of actionable applications that they control, right? For example, Amazon, right, knows more about us than CIA or even the Singapore government, right? If I could put it in a very Singaporean tone. Regulation is possibly something that is a deterrent, but at the end of the day, the migration would also come from, what do we see blockchain and also a lot of the big tech's acceptance and also how people use the technology evolve, right? Because we see consumers and also businesses, they are the most agile and they're actually the most hard to predict group of stakeholders. We've seen the evolution of, before internet age. By the way, internet actually officially kicked off in 1987, right? Initially from Europe and then moving to Stanford and then moving to LAN and then going on to what we know today. And then the different iterations of what internet does, what .com companies do, and then also what the directories do, what the search engines do, what emails do, and then now what these kind of tier 2 and tier 3 level of viral services do. it's not just the companies that are service providers that define the landscape. It's the consumers that actually push for the landscape changes, right? So I think it'll be good for us to actually think about, us as in consumers and also users of technology and consumption, consumers of data. What can we do to actually push all the changes we want to see instead of fearing things that we think we don't know?
So we also have an incoming question from Priyan. Priyan.
Right. Hi. First of all, thanks so much, panelists, for sharing. These have been quite great insights. So I want to circle back to something that Ms. Yvonne mentioned in the beginning about how with each financial crisis, what happens is that through monetary and fiscal measures, financial institutions actually get flushed with cash, but then it sort of hits a roadblock there and it doesn't exactly trickle down to the consumer who is in need of it the most at that point of time. So I want to ask if CBDCs can be a good way to sort of solve this problem. And can it sort of revolutionize the way we look at helicopter money or direct cash benefits as something that what the Singapore government did? Do you think it would have been more simpler with CBDCs to sort of directly transfer money to people?
You see, all of us have like a uniform, like a confused face on our on, right? So that was very well synchronized. Thank you, fellow panel members. Andy, you did the best, confused face look. Ken also did really well. Andrew was like, why we had the narrow eye confused face? It's because CBDC is not retail ready right now, right? And also, if you actually think about when we're trying to talk about are we trying to impact the folks that need the money to spend in the real economy? Meanwhile, can we spend CBDC in the real economy? That's question number one, right? Question number two, how do you dispense them? They need to have a wallet, and the wallet needs to be able to be operated on by these people. They need to have digital identity. They need to have national identity. They need to have different layers of data protection. They also need to have a lot of different layers of, I suppose, infrastructure, right? Before CBDC becomes something that retail people can actually use that becomes more convenient than cash, right? So a lot of those assumptions are not realistic for now. But CBDC does already work, for example, in China for interbank real-time reporting, right? And also for settlement of positions. And I think also in Singapore, Project Ubin, right? The real-time settlement of positions between different financial institutions. Those are real use cases where the infrastructure is available and there are real bottlenecks. And then using these kind of blockchain technology actually can speed up the impossible, right? So we have to separate, what is the reality today versus what the technology is built for, fit for purpose, right? And then lastly, optimize to change the existing status quo, right? So we can't just say, will it or can it or should it? Because these are a bit far, a bit hard to define.
Does this at least sort of support the argument that central banks should look forward to adopting CBDCs in the near future? Would you at least say that? Or
Andy, you're scratching your head too much. You should answer this question.
I just find that it's fun to be in a panel like this because it's fun question. So I think what Yvonne has mentioned and the examples she has said, right? Like for example in China, why they can do this is because they have sort of skipped the whole credit era, and they just hop big into Alipay, WeChat Pay, and so forth and so on, and everything were all being collected. The data, the IDs, and so forth, are all being collected. That's one reason why they could roll this out really fast. But places or countries like Singapore, South Korea, Japan, can all of these countries roll out very fast? I think the answer is yes. And it's not a question of whether the bank would want to do this or not. It hugely depended on legacy systems or legacy issues. Do they have all the data? Can Cambodia do it better than Singapore? So forth and so on. I think this has a lot of linkages, but just keep it very simple, everyone. I think CBDC. When I explain this to people that I talk to, sometimes I just want to let them know that it's just a form of digital fiat that is traceable, that is highly accountable for, and some would also challenge me on this. This is going to be a 24/7 kind of clearing, transacting with no interference kind of a way because of the usage of blockchain technology. So I think let's keep that very simple. And I also want to highlight one other thing, that CBDC is not actually cryptocurrency, because I see this reporting being done in mainstream media, in blockchain media as well. You know, they felt that it's the same thing. But come on, these two things are totally different. CBDC is just a digital form of currency that is using blockchain technology. There will be hybrids that I talk about, like what Ripple is trying to do or what Binance is trying to do to act as a bridge for CBDC, adding cryptocurrency layer on top of it. That is highly doable, but I do think that all these things are going to take on different tracks. You know, I would advocate blockchain as a technology that is able to be integrated into many different forms of businesses. Apart from finance, you know, it can go well with supply chain, can go well with medical and so forth, because there's a need for that technology. But when we talk about CBDC and cryptocurrency, these two things are totally different, and they stand for different kind of finance system behind it as well. You know, one which is very much centralized, like I mentioned. The other one is trying to act like decentralized, you know, but not decentralized yet, as we all know. You know, cryptocurrency are not all decentralized. Don't be fooled by it. All right. And again, sooner or later, you know, there will be a point where these two technology will fuse together, and that will then help benefit a lot of users like yourself and myself. You know, how we use CBDC to buy something, so forth and so on. So this has a certain journey to go. I think we are right at the very beginning of this whole journey, and I do see and I hope to see more positive inputs, you know, from our panelists as well, and also positive inputs from regulators to make this happen a lot more smoother, you know.
Thank you for sharing.
I'd just like to come in to agree with strongly with what Andy was just saying on the fact that we tend to lump in CBDC or different forms of digital currency into one, treat them as one thing, and they're very different for the reasons that he's described. It's a really interesting questions coming through on the chat, but just on the question of CBDC adoption, I would say that, you know, from an MAS point of view, we're more focused on how we can make improvements to existing payment systems. So how we can make payments work better, potentially using blockchain or other forms of tech. So Project Ubin has already been mentioned, where phase 5 was recently completed and involved using blockchain to clear payments in different currencies. I think that's a really exciting development, because I think it's almost universally accepted that moving money across borders is far too expensive. It's actually not too bad, I think, within economies, certainly from a retail perspective. But try and move money cross border, it's far too expensive. I think everyone would agree to that. And just as a kind of footnote to that, one of the consequences of that are felt by some of the poorer people in society. So migrant workers, when they come to remit funds back home, they in particular incur these costs, perhaps more than many of us. So there's also a kind of equity angle to it. One of the questions that's been raised in the text questions that I wanted to come back to is this question of whether, for example, China issuing a CBDC could enhance the threat to the standing of the US dollar as the world's reserve currency. I think when I'm thinking about these questions, it's important to bear in mind that money has 3 functions. So it's not just a means of making payments, which is essentially what central bank digital currency seems to be doing. To me, is a better way of making payments. It's also a store of value So people have to want to use the currency as a store of value. And at the moment, with the capital controls that China still has, the international demand for Chinese currency as a reserve asset remains fairly limited. It has come up, it has increased in recent years, but it does remain quite limited. So the yen, the euro have not really displaced the standing of the dollar as the preeminent global reserve currency. And that seems likely to be the case perhaps for some time to come. Making predictions is a dangerous business, especially if they're about the future, as the old joke has it. But I guess that's how it looks right now. So if we're talking about reserve currency, it's not just about the ease in making payments, but it's also whether the currency is, whether there are assets in that currency that people want to buy. So that's my, I guess that's my response on the question that got raised there.
Let me add on to what Andrew has said. I kind of got inspired by what he said about making predictions about the future. This dangerous business, absolutely, right? Especially for people like us. And I'm also inspired by your background there with the wheel. So I encourage all of us to just look at this thing from that view, right? Imagine you're at the top of the wheel, the Singapore Flyer, and looking down at all the things that we're discussing today, all the trends and the things that are moving around. I think you get a clearer view of what, or you may or may not get a clearer view of what's going to happen, right? I get a sense that there's a lot of very good questions in the audience, and they are rather immediate questions. Sometimes there's a yes or no answer to a lot of these things. I encourage you to actually take that Singapore Flyer view and look at what's moving and what's not moving. Because if we can talk about CBDC all the time, and I think there's enough content between the four of us, or maybe three and a half of us, to go on the whole night. I think about what it means, right? And I like the question about whether it is a way to circumvent sanctions and all that. And you are thinking about geopolitics. The answer is there or not. I think that's the correct direction. Look at geopolitics, look at the socio-economical aspects of things, and how technology is moving. Like I said earlier, it's faster than we can imagine. Our minds are not catching up to what can potentially happen. The power of blockchain, like Andy said, is just beyond imagination. We are only figuring out what are some of the applications. So whenever we look at these kind of questions, take that Singapore Flyer view.
I like to add on a little bit more. Apart from the nice view that Andrew has behind him, I also love to emphasize the fact that we need to be very practical. I think some of these questions here are all very nice questions, but it's very, very all over the place. But what I want to emphasize is that let's be very practical. You know, when we talk about technology, when we talk about even capital markets, so forth and so on. Right now, the fact is, in Singapore, SME still holds a very huge population, you know, among the whole business arena. As you can also observe yourself, you know, a lot of companies are still using their checkbook, which is way behind what we are talking about right now, fintech. You know, if you go to places like South Korea, you ask them about checkbook, they say, oh, what's that, man? How does that work, you know? But in Singapore, we are still using that. You know, if you are a membership-based society, you accept checks, everybody's going to pay you $100 at the end of the year. That's a big headache, man, if they never even indicate where they are from. So I think we got to take on a very practical approach. You know, when we talk about technology, it got to be step by step. You know, in Singapore, I think first, of course, get rid of the checks. Second, more vendors or more retailers accept credit card. Then let's talk about QR codes. You know, then we talk about, you know, more futuristic things like CBDC, cryptocurrency, and so forth. I think we all you know, we are all learning daily. So let's take on a much practical approach to see how the whole fintech is evolving, especially around you, then you can determine, whether we are at stage 1, stage 2, or even at stage 5 or stage 10, of adoption. That will be that will also inspire you, students, where you want to do, where you want to be, in future after graduating from where you are, whether fintech is the thing that you want to do, whether CBDC is something that you want to really put your time into it, because there's still a long runway, so let's stay very practical, and I hope that answers some questions as well.
Due to the time constraint, we only have about 20 minutes left. I'd like to just pose one last question for all of the panelists. So currently we see that, this things like RCEP being signed, as well as, the Brexit coming to probably to a conclusion anytime soon, as well as if Joe Biden does get elected to be the president, how will these affect the future of banking? How will these affect the future of the banking industry? Mr. Andrew.
So your question's probably really on geopolitics and political developments in a number of countries. So as something that, maybe there's one point I'd like to make, there's something that came up in the text chat on the side there, which is that there's a question on regulatory arbitrage. So financial institutions looking for the, I guess, the easy place to do, the place where the rules are lightest. My sense is that that's really, that there's no tolerance, or there's no kind of agenda among regulators to have a, to offer a kind of easy regulatory jurisdiction that institutions would, and then try and kind of poach business for that reason. I think regulators are focused on the stability of their financial systems. There's a lot of time and effort goes into coordination of regulation among regulators, and there's an alphabet soup of forums where that coordination happens. And because we're in Asia, the meetings are always in the evening, so that's great. But there's a lot of time gets spent on that. So my sense is that kind of chase for the bottom in regulation, that's been, regulators have actually taken a quite expansive and global view on that, and I think that's very positive. It's one of those things that could have gone wrong but didn't, and it's worth thinking about those two sometimes. More broadly on geopolitics, well, I wouldn't claim to be an expert, but I think from our perspective, what we emphasize is the continued importance of multilateralism and of open goods and capital markets. Of course, not a completely open free-for-all, which would likely have implications for stability, particularly for smaller countries with less developed less developed local capital markets. So large amounts of globalized capital washing through a smaller country could be quite destabilizing. So that needs to be borne in mind as well. But yeah, I think emphasis on multilateralism, on maintaining the openness of goods and capital markets with appropriate controls and safeguards. And if we are heading to a more fractured political environment with more confrontation and competition between major powers, that kind of harms everyone in the long run. So that's the message that we would, maybe it's quite a simple message, but I think it doesn't seem to get through to everyone all the time. So perhaps still a message worth sending.
Mr. Andy.
I read the question. Again, I'm also not a geopolitical expert, but I do want to offer something that is a bit more optimistic. Whenever you talk about elections, whether it's Biden, what's going to happen, and so forth, I think the snowball effect down to a consumer, like all of us right here, is going to take some time. So being in Singapore, I think we have our own ecosystem. We have our own capable government to to help us through some of the bad times and so forth. So I want to put it this way, especially to the students out there, in this whole group chat, just stay positive. Try to do what you like and passionate about. And if you are going to graduate next year, God bless you. There will be a lot of new opportunities ahead, because a lot of the older folks has been retrenched, ran out of job and so forth. It's time for the younger ones to fight hard and do what you can. But again, the older folks will also get good jobs after this. So let's not worry too much about geopolitical issues. As a new undergrad and so forth. Just do what you can, and then if you are more geared towards technology, more geared towards finance, you could approach any one of us. We can definitely guide you to some good places where you can explore further.
Yeah, Ms. Yvonne, would you like to end off with any remarks, given that majority of the viewers are largely students, going to be young working adults soon? What advice would you give to us as young working adults?
Well, advice. I don't think I have the audacity to advise people. I like to think I'm still learning. So from just summarizing some of the other very, very pragmatic suggestions, right, from my fellow panelists. The key thing is don't be afraid, right? I started working very early on, but that's not in Singapore. And I think exploring various paths and also making enough mistakes so that you can accumulate a lot of different life lessons is really important. And also do observe the effect of sunk cost, right? In economics, if you overvalue sunk cost, your future upside is severely capped. So, if I translate it to human speak, just because you've actually thought that you invested a lot of time and effort into doing something, and also therefore you don't want to turn and try something else, that ensures you're not going to get much out of your life going forward, right? So regardless of whether you are young or old, and if you want to actually explore other aspects of your life and also what impact it can create, right, on society or different groups, do it. And don't think that, I've already committed so much, or that I can only do it when I'm young. Those are excuses for yourself, right? So trying different things only adds to your career path, and nothing is ever wasted, right? So I think if I can share a little bit of, I wouldn't say advice, but my suggestion is, think rationally. Don't be kind of confused by your own excuses, and don't get married to sunk cost.
Mr. Ken Choi, any ending remarks before we end off the Q&A session?
I feel like I had to apologize for opening up the geopolitics can of worms, right? That's not the intention of what I said earlier. But I still maintain that it's a very important thing to think about. And I like to use this analogy that today in this world, I think I'm borrowing this from Kishore Marabani, and he gave this very apt analogy that, maybe less than 100 years ago, we were a flotilla of ships, right? And every country is an individual ship or boat, depending on the size, sailing in maybe different directions or maybe in the same direction towards something. Today, the world is very different. We are no longer a flotilla of ships. We are actually 195 cabins in a very large cruise liner. We're all heading the same direction in the world. And we can have our squabbles between cabin 351 and 353, right? But make no mistake about it, we are on this, arc, right, in the middle of this dark space, heading the same direction altogether. So I think it's important that we realize that. As for the future, I like to talk about sunk costs. I think that's one of the things that that plagues a lot of us, and maybe for myself, I was plagued by that for a very long time too. sunk cost is a very dangerous thing, and be aware of that. And when you're young, remember you have a very, very long way ahead of you. And now I believe in 100-year life these days. And if you graduate, you are looking at another 75 years of life, right? And what are you going to do with that life? How many mistakes can you make and still recover from it? Quite a few. Remember that. So I get asked a lot of questions about what should I do with my life, whether it's about passion or whether it's about something I'm good at. Don't think too much, right? And it's good things to think about. Be aligned with your values and your purpose. Spend some time finding those things out. You will realize what makes you tick and what doesn't. And then just go for it, right? Make the mistakes. I'll end off with one last quote, and I paraphrase a little bit from Tony Xie, who passed on a few days ago. Those of you who are not familiar, is the CEO of Zappos, one of the companies that is renowned for customer service, right? One of the things that I read that he wrote some years ago is that no matter how tainted your past is, your future is spotless. With that, thank you.
Thank you so much with that quote. With that, we end off our Q&A session, and we would like to give a big thank you to all the panelists for coming down today and sharing your thoughts and opinions regarding the future of banking and capital market. And Lauren, back to you.
Thank you, Pao. That was a very insightful discussion. I'm sure that we'll all have many takeaways from this discussion. Now I'd like to pass the time to Michael to do the vote of thanks.
Yeah. Hello, everyone. So I'm Michael, the Vice President of Operation. So I would like to say thank you for all of the panelists and all of the person who come here today. I know it's a very challenging time for us, and all of the panelists have given us their very, very precious time to talk with us and share their opinion together with us, which is a very, very, we're very delighted to have you all here. And with this today, we conclude all of our summit. So yesterday we also had a lot of participants. So thank you all for the hard work, and I hope we can soon gather together and then meet again for meeting together. Yeah. So I think that's all from me. Lauren, thank you.
Now, I'd like to invite Anushka to take a photo for us to cover the event. Can everybody now turn on your cameras? Anushka, please.
I'm just waiting for everyone to turn on their cameras. Just 2 seconds. So yeah, I'll take the photo at the count of 3. Why don't you guys just look at the camera and smile, please? Yeah. 1, 2, and 3. Just one more. Yeah, keep smiling, please. Yeah, it's done. Thank you, guys.
Thank you, Anushka, and everybody else. Can we go back to the slide? Okay, thank you. Now, can I get everyone to just scan the QR code and help us to fill out the feedback form? Your feedback is really greatly appreciated. We have come to the end of the panel. I hope that everyone has takeaways, and thank you so much for the panelists to provide us with such an insightful experience. And your sharing is indeed valuable. Thank you for everyone who made this possible, and the panelists for your time this evening. We hope to see you guys on future panels again. Thank you so much.
Thank you. Good night.
Good night.
Good night.
Bye.
Bye.
Thank you so much for joining us. Thank you. That was some really great moderation, Pao. Good job. Have they all gone? Yay! This is it, guys. Summit's over. Congratulations to everybody. Round of applause. How do you feel, Pao and Lorraine?
Oh, I think it's still recorded.
Oh. Oh, crap.